So take a look at this level here. Prices are basing sideways, and all of a sudden, there's a huge rally in price from this level. Okay, look at the breakout to the upside from this level. How did I know that was going to happen? Right? Again, I didn't. Okay? Not only did I not know that prices were going to break out here at the origin of this move, but I don't even care to know that. I'm not looking to figure that out. I'm not looking for that information. Okay? Let me tell you a quick little story. So, if you know I live in Chicago. I was born and raised in Chicago, and if you're familiar with the University of Chicago, most people consider it a pretty good school, and lots of a number of Nobel Prize winners there, economics, and there's one professor there. I'm not going to mention his name. I'm sure a number of you will know who he is. Anyway, he and I started conversing on this a little bit. I actually went down there and met with him for a little while, right? And we were talking about all this, the whole supply-demand strategy. And he kept, he liked the strategy and all that, but he kept asking these same questions over and over in different ways. And what I realized, and he's a Nobel Prize winner, and what I realized was, I said, obviously he's won a Nobel Prize. I haven't won a Nobel Prize or anything like that. And he's a professor at the University of Chicago. I'm not a professor at the University of Chicago. But in my mind, I just came to myself, he doesn't get it. He's asking a question. He's looking for an answer to a question that he shouldn't be asking. That doesn't matter. It's not the point. It's not the focus. Kept saying, and again, I'm not talking negative about him or anything. It's the whole point of kept focusing on this predictive analysis. In other words, looking at this, how did you know that was going to happen? What told you that was going to happen? And I kept saying, well, nothing. I didn't know that was going to happen, but that's not the point. You'd ask it in another way. How did you know price was going to do this? I said, I didn't, but that's not the point. It doesn't matter. I don't care that this happens. Everybody out there is so focused on predicting this, okay, that they don't see that the very simple strategy that's right before them. So let's dive in a little bit. Instead of trying to predict that this breakout is going to happen, we're not trying to predict this move, and we're not trying to make money when prices break out like this. Okay. Instead of that, we let this happen. Prices may break down from this level. They may break up from this level. Here they broke to the upside. We let this happen. Okay. And when it does, that gives us all the information we need. Okay. It gives us all the information we need, meaning, if you really think about the core, the only thing that causes prices to turn in markets and move in markets is when supply and demand is out of balance. A larger number of willing demand than supply right here, okay, price is eventually going to move higher. Once that last sell order is filled, you have a significant amount of demand or willing buyers left over. Price has only one way to go, and it's up. So we let that happen. And once this happens, that gives us this information, that you have a large amount of unfilled buy orders still sitting here. There were a lot more people that wanted to buy here than could buy. It's not even people. It's willing demand, right? Okay. So, again, once that happens, back to core strategy, we wrap two lines around that level, let that breakout happen. So then when price comes back to the level like it did here on the Fed day, this is a great trade for us here on this day. When it comes back to this level, we know two things to be true. Okay? Let's only focus on things, objective information. Number one, we know that whoever is selling on this decline in price is selling after a decline in price, right? Whoever is selling right here at this level is selling after a decline in price. Okay? You can't do that consistently in any market and be successful taking that action, right? You can't consistently sell after prices drop and be profitable. It's not possible, right? Number two, they're selling at a price level where the breakout information here told us that demand exceeded supply. All right? So the seller here, again, is selling after a big decline in price and into a price level where the chart already told us demand exceeded supply. So instead of taking the initial breakout and trying to buy while price is shooting higher like this, meaning you're going to be getting a bad fill, it's high risk, big stop, all that stuff, let prices come back to the level, and that's the appropriate entry for the breakout trade. Okay. I'm going to take this one step further in just a little bit when we get to the live charts, but I think you're starting to get the point, hopefully. Let's go to one more here, and this one's going to be really important. So here I'm going to add something that I really haven't talked about in online trading at FXStreet, I don't think. So here's a trade we took. Okay, this is just a short-term income trade. Made a few $100 on it. Not a big deal. Anyway, supply level. Again, notice the breakdown here. We don't try to predict this breakdown. We don't try to short this breakdown. We don't try to make money when prices drop here. Okay. Instead, okay, we let this happen because, again, it gives us all the information we need about the supply and demand equation at the level. Now, remember, it's easy to look at this one and the last two and say, well, if you just would have got in on the breakout, you would have made money at some point because price just kept going. In those cases, true. But if you look at this one, which is like a lot of them, if you would have shorted on this big red candle, well, you probably would have shorted here too, right? And you would have lost money because prices came right back against you. So again, I would say don't do that. There's no point, right? So, but what I want to add in this one is this. So again, same thing, just reverse here. We short on the first pullback to the level and then take our profits at the nearest area of demand below. Okay. But here's what I want to add. Here's what I want to add. That's pretty cool. You can write Arabic in the chat. I didn't know you can do that. I'm assuming that's Arabic. But, or some form of Arabic. Arabic's always a language I wanted to learn, but everyone tells me it's too difficult. Anyway, and it's the Arabs that tell me it's too difficult, so I don't know. All right. So, take a look at this. So now I want to get into something that we really haven't gone over. So now, how do you determine a good supply and demand level versus one that you shouldn't take? Well, we go over this list, and I think you can see this now. Let me know if you can see this. I just pulled up the list of a list of odds enhancers that we go over. So we go over, the structure of a level and then the location of that level on the supply and demand curve. We have a simple scoring system that we use here, and I'll explain more of that, another time. But one thing that I want to point out that is so key, right? So key to all this. Yeah, we'll go over that another time. Don't worry about the list, but is this. A supply or demand level, right? Well, let me explain it this way. Notice where this all starts. So look over here on the left of the chart. We've got some demand here, right? Our base and our rally. Here's the first pullback. Here's the second pullback. And then on the third pullback, price just bases and then goes through the level. Now let me explain in detail what's happening, and then I'll make kind of my very important point. A demand or supply level is simply think of it as a stack of unfilled buy or sell orders. That's exactly what it is. Okay, it's an area where supply and demand are out of balance. So when prices shoot up from this level, there are buy orders left over here that were not filled. When price comes back to this level, some of those orders are filled. When price comes back to this level again, obviously goes deeper, which it should. More of those orders are filled. And when price comes back again here, notice we don't rally anymore. Instead, we're basing sideways. Why? Because now the supply-demand equation at this level is flipping. It's about to flip. Okay? Instead of demand exceeding supply, now it goes from being out of balance on the demand side to then equal to then now supply exceeds demand. Now there's more sell orders than buy orders at this level. that make sense? That's exactly what this picture is telling you. Okay. So supply levels, right? The supply levels that that break through the demand levels are the supply levels you want to take. The demand levels that break through the supply levels eventually are the demand levels you want to take. Okay. That may not sound like a big point, but believe me, it's an enormous point. It's a filter that will cut out, a lot of your, if you're not focused on what I just said, this filter should cut out many of your levels that don't work and keep the levels that do. All right. And that's why I like this example so much, because it's just so clear. I can replace these candles with actual orders and make it even more simple for you, but I think you get it. I see some questions here. Which time frame do you go your levels on? Any time frame, it doesn't matter. So you don't just want to focus on. All right. Let me. So Santosh, I see your question there. Can you repeat it, please? Let me repeat it a different way. You see this area up here at 332? We can look at that and say that's a supply level, right? This while this structure might look great, and in fact may even look better than this one. The difference is this supply level, it's just a supply level sitting there, where this one is the one that takes out that original area of demand. This one up here did not.